This is Converge, a podcast from Convera. Come with us as we shape the future of finance.
Welcome to Converge. I am excited to be sitting down with John Pitts from Plaid today. We're at Money 2020 in Las Vegas, as mentioned, and we're discussing some of the hottest interests and issues in financial services that are being debated right here on the floor today. John is the global head of policy at Plaid, and Plaid, as many of you know and many consumers know by now, is an open banking pioneer. We're familiar with connecting our banks with other financial services. John, welcome to the show. Thanks so much for taking your time to be here. Can you tell us a little bit about your background, what you did before Plaid, just to set the stage, and what your role is there now?
Alex, thank you so much for having me. Thrilled to be here. It's, I don't know, the energy of this Money 2020 is incredible right now, even more so than last year. So Great time to be here, great time to be talking. My background, I spent a lot of my career working at the Consumer Financial Protection Bureau. And I had a kind of odd job there, which was intergovernmental affairs, basically figuring out how the agency should work with other government agencies. Mm-hmm. And one of the things we had to figure out is, as all of these new fintech products and services started coming to market, no one really knew who had responsibility for them as a regulator. Mm-hmm. But we knew that consumers were voting very heavily for, I want these services. Like, these are good, I like them, they're creating opportunities that I've never had before. And I did a lot of the coordination with the government agencies on sort of how do we figure out how to make this work. Mm-hmm. And one thing that I kept seeing over and over was all of these products require a consumer to be able to share some of their financial data. And a lot of them, most of them even, are using Plaid for that. And so then I got really excited and said, you know, this feels like a huge change that's going to happen in financial services, and one that's going to really benefit consumers. And when the opportunity came up to join Plaid and work on that and sort of build a company around that thesis, I jumped from government to Plaid and have not looked back. And, you know, great news this week, a new open banking rule came out in the US. Maybe we'll talk about that a little bit over the course of this conversation. Mm-hmm. But it is incredibly exciting to see how fast the industry has advanced and how much the regulators have supported this move to consumer-controlled financial services.
Couldn't agree more, and I think it'll only get better. So you spoke on a panel yesterday that was titled Putting Income Data to Work, Unlocking the Next Frontier of Finance. So what does it mean for the industry and consumers now that income and employment data is more integrated into Plaid services? What does it mean to have a next frontier, and what is that next frontier exactly?
So I want to tell this from the perspective of a consumer, right? You might be working 2 or 3 gig jobs, and the job of managing your financial services and making it work for your life has grown more complicated than ever, right? Mm-hmm. You've got a lot of choices out there of how you can manage your money, but you're also working a couple of jobs, you've got multiple bank accounts, you've got multiple apps. Yeah. So for that consumer, their financial life really starts with that paycheck. And you can't say that someone has a full appreciation of their finances and control over them unless that payroll is built into it. Mm-hmm. So let's take that same consumer. Let's say they are working at Uber, right? And they just finished a shift. They've earned several $100s. Mm-hmm. It might take 3 days for that several $100s to get to them because it's an ACH transaction. What if they could get that payout instantly today? What if on top of that, they could not only get that payout, but that payout would be recognized by a lender because, you know, I've got to, you know, fix one thing on my car. I need someone who's willing to lend me the money for a couple of days to do it. That integration of payroll into all of your financial life gives you opportunities to engage with your finances in a way that you never have before. It also gives you more choices that you've never had in sort of how you manage your money, how you make your money work for you, and how you create more choices in your financial life.
Mm-hmm. And surely there are risks with players having access to sensitive financial data. How do we ensure that the risks don't outweigh the rewards?
Great question. And I want to push back very mildly on that because, I mean, I don't know the last time you paid someone with a check, but when you did, you handed them a lot of your financial data, right? Yeah. It's all written right there on the check. And so this is something that we have been doing for a long time. And I think for a lot of people, it feels like it could be riskier when it's digital, unless you build the right protections in place. Yeah. And so I think there's two good pieces of news there. One, the entire industry is shifting to APIs as their way of managing that data access. Those APIs allow you to build in much greater control for the consumer to protect themselves, protect their privacy, make sure that they are staying safe. I think Plaid's been a leader in driving some of that change and also building out products and services that give the consumer real privacy controls on how their data is shared and used. The other thing I would point to is now that government regulation is coming, there's important sort of uniformity of protection that's going to come with that. So under the CFPB's proposal for open banking, new privacy rules are going to apply to lots of companies in the ecosystem. I think most of them are already doing privacy incredibly well. But I think from a consumer perspective, having the confidence that the government is there, making sure that your data is being handled properly, is a real boost to trust in the ecosystem and something that's good for everyone.
Yep, couldn't agree more. So at its core, you've said that fintech is about consumers being able to move their data from place to place without that friction or restrictions so they can get the service they need when they want it, without having to also go into a brick and mortar location, which is becoming increasingly rare. So do you think there's a limit to the kind of data that should be shared, or is it really all just a case of consumers needing this granular control and that's sort of the goal?
I think, Alex, that is the most important limit. The most important limit is the consumer is the one in control and they're the one who makes the decision. So the first limit that I would always put is, has the consumer said yes to this? You should never be sharing something that is beyond what the consumer said yes to and understands. The other thing I would say is, there are some types of data where they're actually proprietary, right? Like if a company has built their own credit score, that's not necessarily the consumer's data. That is something that they've really put real equity into developing. That's probably the kind of thing where that's their commercial data, not the consumer's data. And that is another reasonable limit on what should or shouldn't be shared in the ecosystem.
And in terms of your view of open banking and your vision of open banking for the future, when you talk about it in the way that Plaid positions it, it's a broader vision than some folks who primarily focus on it as being a way to open up data from legacy banks to new entrants to the markets like fintechs. Can you expand on that broader vision that you have for open banking and share what that really in the unique Plaid way, what that vision is for the future?
Yeah, absolutely. And I think of Plaid in some ways as sort of an engine for more competition in financial services that benefits the consumer, right? The more different companies are competing to offer the consumer the best financial product, the better the consumer does. And the broader you make this ecosystem, the more that competition is going to exist, and the more choices a consumer is going to have. So it's when you lower that friction, it's not just lowering the friction of, I can move my data from A to B. It is, I'm in a choice network where I can pick the apps that work best for me. And by sharing my data with them, not just move the data, but also get a new service, allow someone to develop a new service that has never existed before, and allow them to sort of try to get me excited because they've offered me something better. That is really the real sort of ecosystem I think we're trying to build and drive. And it's one where the consumer is at the center of financial services rather than being sort of an end user of financial services. They've got everything built around them. They've got a full 360-degree view of their money. They've got a full 360-degree view of their financial life and their financial data. And they can navigate easily through a number of choices to get what works best for them.
It's an incredible focus on customers there, and I think that really stands out. Do you think that legacy players in finance get beaten up unfairly for not being innovative enough?
I actually think they do.
Still?
Yeah. So, 3 of the top 5 traditional FIs banks are now Plaid customers. They are innovating incredibly quickly as they move to digital as well. And I think there's actually a little bit of a misconception of sort of fintech as a separate category from traditional financial services. All financial services is fintech these days, right? This is a broad transition from brick and mortar to digital, and some of the big banks are actually leading the way in that transition. And I think they deserve credit for the innovation they've driven. I expect to see some of the biggest innovations to come out of legacy financial institutions because the new competition and the new consumer expectations are spurring them to be innovative and deliver new products and experiences themselves.
So open banking in the US is slightly unique in that consumer demand has driven its evolution. Do you think that has impacted the landscape here versus Europe and other markets where regulators have been more involved?
Absolutely.
Yeah.
I actually think it's the secret sauce of what's happened in the US is, every fintech entrepreneur listening to this, like, you have been successful not because the government gave you a regulation sort of permitting you to be successful. You've been successful because you developed a product that consumers really, really loved. That consumer demand driving product is always going to be better than sort of a top-down regulatory definition of what a product should be. And Europe really took that sort of top-down definitional approach. And I think we've seen some of the limits of that. What's exciting about the US opportunity is, just to throw a stat out there, at Plaid, we see now that 1 in 3 consumers have connected at least one app via Plaid. For heavy fintech users, over the last year, the average number of apps they've used has gone up from 3 to 6. So we are still early in the growth curve here in terms of the number of consumers who are using this and the depth of that engagement. But that consumer demand is absolutely driving innovation and product development in the industry at a much faster pace than anyone else that we've seen in other markets.
And if there is one, what is the biggest threat to the progress of open banking right now as it stands today? Is it fraud? Is it ongoing regulation? What's holding it back, if anything?
So I don't think anything is holding it back, but I do think there is something where industry should be maniacally focused on really maintaining, developing, and enhancing, and that is trust. If you think about, I don't know, for me, when I think about, in my mind, an image of a bank, I think of a vault, right? That's the traditional image of a bank. It is a giant steel door and your money is safe behind that. If you are talking about a world where you're using multiple financial service providers and your money is moving back and forth and your data is moving back and forth, you want, I think as a consumer, that same image of a vault, that even if it's moving back and forth, it is safe when it moves and you can be confident in navigating it. And so I think success and long-term growth here is going to come from the industry focusing as much as that on that long-term trust development as they are on sort of the individual products that they ship and launch.
Well said. And as you said, you've worked for the federal government in financial regulation, and now you're head of public policy at a fintech. So you've seen both sides of the coin. Do you think it's inevitable that there will always be some degree of tension between the two? So is it a healthy tension?
That is exactly the right way to frame it, right? I would say, interestingly, on this open banking stuff, there is not tension. Industry and government are all pretty well aligned that this is the right direction to go, and this is the right way to move in that direction in the US. But I think for fintechs, it's really important to understand that the government plays a distinct role from industry in protecting consumers and also offering them great products and services. It's your job as innovators and entrepreneurs to come up with products that consumers love. It's the government's job to make sure that those products are safe. And sometimes there should be healthy tension in like, what can I offer versus is it safe? And as a fintech, being able to recognize the legitimate role of government and work with government as a partner to make sure that you're getting an outcome that you both want, which is consumers getting good products, but using them safely, is one of the most important things you can sort of think through in making sure that you are going to have your own long-term success, because government's going to be part of that conversation with you for the entire existence of your company.
Yeah, for sure. And let's just talk about now. Let's talk about what's happening at Plaid recently, and I would like to tie this into the increasing interest in real-time payments and what that means for ACH. Is ACH still competitive as enabled through APIs? And is it setting the bar for the standard that should be reached, at least at a minimum, for these real-time payment schemes? And how is Plaid thinking about these things as they evolve into the future where cross-border payments and payments in general will be executed instantly?
I think the emergence of the real-time rails, both RTP and FedNow in the US, is maybe one of the most exciting infrastructure developments in my lifetime, especially when you combine that with open banking and the ability of both data and money to move instantly wherever the consumer wants. It really unlocks a huge opportunity. What's been really interesting to see is Plaid has developed some products like Signal that actually make the ACH rails much more efficient and is still innovating on top of those old ACH rails and actually makes them look and feel to a lot of consumers like they are a real-time payment rail. The reason I think that's important is it really has, as you said, raised the bar on what does a real-time payment need to deliver? Because it's not just the money moving instantly. It's the user experience, it's the touch and feel for the consumer that's going to matter here. And the reality is ACH is still growing as a rail. Volume on ACH is still growing today, and it's growing because it feels better for consumers to use than it did 5 years ago. And it probably will still feel better 5 years from now. And so I think the challenge for everyone as we move into RTP and FedNow and other real-time payment rails is how do you make them excellent? Because they're gonna need to be excellent to entice the consumer away from ACH. I think they are already exceptional, and I think there's the opportunity to make them excellent. And excellent real-time payments is a absolute phase shift in how financial services works in this country, and maybe the most exciting thing that I think we're working on.
That's amazing to hear. And do you think that holds equally true for both B2C retail payments and B2B wholesale payments, that bar is going to be the same? Or is there more of an advantage for real-time rails in one area versus the other?
I think it's going to be true in both. I think there's different challenges in each rail and each sort of scenario that we're going to need to work through. But I think even in the B2B wholesale, increasingly we're seeing the consumer playing a role in that B2B. So, they may have an interface where they want to permission that B2B into using that real-time rail. And so making sure it works in both contexts is going to be critical for adoption and for sort of growth in that area.
Yeah, I couldn't agree more. Well, thank you, John. That was a great conversation. I hope you enjoy the rest of your time in Money 2020. Thanks for joining us today.
Thanks, Alex. It was a lot of fun.